we'll give everybody a second to pile in. It's quite interesting because it takes a second. Like, it's virtual. You would think automatically everybody flips on. It like takes a second for people to pile in.
Sure, yeah, it's sort of it populates.
Yeah.
Just gonna
So do you live in the city?
Here. I do. I was upstate at my house in the country for the first 2 weeks, but needed to come back to the city. So against my mother's strong objections, I've made my way back to New York. But yeah, there's a lot obviously to do and a lot going on here. So
yeah, it's I have so many friends in New York City, and all of the people I know closely are all safe. But they said that the emotional toll of the stories of the people around them is really kind of starting to grate on them. So we've been having a lot of these calls, like, let's not talk about what's going on in the world. Let's talk about Foo Fighters' new album.
Exactly.
Let's talk about anything.
Yeah, no, this has definitely been an excuse for me also to reach out not only to the folks that I would see regularly, but friends and family that I haven't spoken to in years. I've been able to reconnect with, and I've had a good excuse to do that. But a lot of the conversation is just about how are you doing, sort of what's happening. Are you watching Tiger King? And I feel like I am the only one who is not. Have you seen it?
I am not watching it. I'm watching Ozark. I'm a huge Ozark fan. So their season came out. I am trying to limit myself to no more than 2 hours of TV a day. Yeah. Because it's so easy to get sucked in. It's just so easy to get sucked in.
Yeah, I've not had much time to watch television either. But Apple TV, for whatever reason, has been absolutely insisting that I watch Contagion. Every time I look at sort of what's most rented and most watched, it's either like, you need to watch Tiger King, or it's really pressing me to watch Contagion. And I finally gave in a couple of days ago, and I couldn't sleep all night after that. One
Sam,
question
it's funny. Everybody thinks that we don't know that we're live. Just to let everybody know, we know we're live.
No, we do know. We do know.
we're just kind of BSing to get as everybody piles in. So this context, you all know what the event is. Therefore, you signed up. So I'm not going to read out Sam's bio, so to speak. There's plenty accolades. You know what you're doing. You're at NYU. Read up on them. Plenty of places to talk to you, including XM Radio and everything else that you do. But the context I said is like, Sam, it's kind of like me and you are having a beer and everybody's eavesdropping on us. And every once in a while, someone's going to nudge in and say, hey, what did you just say? And so really we're kind of focused on kind of starting the conversation. So it is interesting, right? I mean, the social element of what we're doing. I mean, everything is getting touched. Right? We're talking about university all of a sudden going online, and things are going to change. There's so much, we're trying to avoid kind of beating up the same topics, like, will real estate be the same? The reality is nothing will be the same, right? I mean, I don't think anyone is untouched, right? I don't think, thank God we've got such a great kind of healthcare support system, whatever people want to criticize about timing and all of that. Me and you travel a lot. I would rather be in this country than most countries during this time, right? From a healthcare.
I think that's fair. And when we look at the response that we've seen in different parts of the world, and I think India is a very good example of this, where the government's response at a national level has been almost draconian as compared to what we see in most other parts of the world. There was 4 hours notice leading into a total national lockdown of 1.3 billion people. We've really not seen anything on that scale happen that abruptly anywhere in our lifetimes. And while the government has certainly been criticized for what it could have done differently, what are ways in which it could have been better prepared. It's easy for all of us to play Monday morning quarterback. But at the end of the day, to your point about healthcare infrastructure, very, very, I think folks there are very aware that with a much more limited healthcare infrastructure than we have here in the United States, their capacity to actually address the crisis if they see a large number of infections is much, much more limited. Their chance to contain this is really enacting very, very aggressively right up front to ensure that the numbers remain limited. And so I think that's a factor for all of us to consider when we're looking at what might the progression of the virus look like and what kind of toll might it take in terms of a humanitarian crisis in other parts of the world. When we look at South Asia, Southeast Asia, Sub-Saharan Africa, parts of the world where individual countries may have much more limited infrastructure and capacity to address a large number of infections, that's going to be a real factor for us to be thinking about on a global level over the next couple of months.
Yeah, it's interesting. And also, I was talking to some friends. We're very close with the Singapore government. We do a lot there. We had a call the other day. They're very much business as usual. Benefit of a nanny state. Just lock everything down. Lots of government support. It's very small too. People say, "Oh, well, look how great Singapore is." It's like it's small, right? I mean, so containing things. You're a nanny state. You tell people what to do. Period. It's a small place. It's easy to manage. But I think someone said to me yesterday that it's not really like flatten the curve. The curve looks more like a bouncing rubber ball. That it's not really scale up, scale down. It's more like scale up, come down, maybe a little bit of a bounce. Like it's going to be a slowly bouncing ball. Like that's the reality of what the curve looks like. That the next whatever will never be at the amplitude of the first, but it's a slow progression. I thought that was a pretty interesting description.
Yeah, the difficulty for a lot of us who are economists and statisticians and looking at the data, obviously, we preface everything by saying that we're not folks that have specific expertise in medicine or in virology or any of the very important fields that are ultimately supporting us in any kind of statistical assumptions or analytical assumptions that we might make. We really need to defer there, but it's a real data challenge as well. Because we know that while we're seeing the numbers rise in terms of diagnoses, and it looks like at some point early this afternoon we'll pass 1 million confirmed diagnoses globally, and 50,000 confirmed deaths that are specifically related to the virus, that there's a lot of noise and measurement error there. The number of confirmed diagnoses is a lower bound on the actual number of cases, but we don't have a really good way of knowing how serious or how significant that underestimation is. If there are certain parts of the world where everywhere we're ramping up testing capacity, but there may be parts of the world and maybe parts of the United States where the progression of the virus is running ahead of the ramp up in our testing capacity. So while we're ramping up capacity, it's not necessarily the case that we're getting more accurate or precise measurements yet. And that is a real challenge. We are looking at that data, from different countries. And again, I'll refer back to the example of some South Asian and Southeast Asian countries where the numbers appear very low. I think there's a lot of concern. And again, looking at this, from the perspective of a statistician and an econometrician, there's a lot of concern around just how significantly we are actually undercounting what's happening there.
Yeah. How do you, you're teaching classes, right? How are you coping with sticking to the core curriculum and not getting and in many ways maybe contextualizing the core curriculum around what's going on?
Yeah, so I think it comes back to a really important point that you just made, which is that we've seen a lot of things go online, whether it's real estate, whether it's the way that all of us conduct our businesses. We've been making gradual incremental shifts to leveraging remote working technologies and cloud technologies, online platforms in all of our industries, whether it be education or anything else. And so when you look at sort of what we've done at Schack, we probably, going into this, already offered more of our courses online than any other real estate program in the world. For any one of our core courses, there was always at least one section that was already online. And that was to, leverage the platforms, but also to make, to make our programs available to the person who said, this semester, I need to be working on a deal in London, or I've just got some ups and downs in deal flow in my company, and having the opportunity to work either synchronously or asynchronously for a particular course would just allow me to maintain the continuity of my academic program. Students who are undergrads studying abroad, who may still have a core course that they want to complete, while they're in another part of the world. So I think, like every other business, we have continued to migrate and to introduce platforms that allow for us to work remotely and to leverage all the different cloud-based and shared economy services that become available. What we've seen, I think, is sort of in the education sphere, and again everywhere else, is a very, very abrupt change in the delta. So we've gone from slowly and incrementally and in a very measured and thoughtful way, introducing remote teaching to very abruptly shifting our entire curriculum online. And I have to say that whether it's NYU or other universities around the country or in other parts of the world, well, it's invariably the case that we're going to see varying degrees of success. Some universities are going to be able to deploy and pivot very quickly. Others are going to take a little bit longer. By and large, universities, I think, and high schools as well, that have had the capacity and the resources to do it, have done an extraordinarily good job of pivoting in making sure that at a minimum, their core classwork has moved online. And I think the goal for most universities is to make sure that there's no interruption or disruption to students making continued progress in their academic careers. So people that are scheduled to graduate in May should still graduate in May. We've had to think more creatively about some of the extracurricular and co-curricular programming. We host one of the biggest REIT conferences in the world. It was to be our 25th anniversary of the REIT conference just on Tuesday of this week. And it's an extraordinary roster of folks, the CEOs of all the major publicly traded REITs. Sam Zell does a one-on-one fireside chat with us every year. That kind of thing that is premised on co-location is going to be a little bit more difficult to rethink. But I can give you some examples of things that we've done. In addition to the core courses, each one of our faculty members is participating in a program where they're bringing to bear their respective expertise in thinking about how is real estate being impacted by everything that's going on. So we've got a specific lecture by a faculty member, Richard Lambeck, on how the construction industry is being impacted. Tim Savage, who heads up our data analytics program and was formerly at CBRE Econometrics Advisors, is doing one on how big data can be deployed to in an environment like this one to keep transaction activity going, and what and how we might speculate around some of the long-term implications of the way in which business processes are changed. Josh Pankton heads up our entrepreneurship program and our prop tech program. There's an incredible number of case studies that are going to come out of this. So we've done a lot to connect students, industry, using these platforms, but in a way that sort of the delta's really changed. And I think that's what we're seeing, in the real estate industry as well. Lots of incremental change, but this has been a very abrupt one. It's going to, really be very long lasting in its implications.
Yeah, it's interesting. Some of the universities I support and help out, I was talking to a university president yesterday, and they were saying that professor office hours are jam-packed because they're doing them online, and that the timing and scheduling for a student to go across campus and go see a professor, they've just always, office hours have been light, but now all of a sudden they're very busy because it's like they're very busy. So if you look at an industry that this event has kind of taken away regulatory challenges, et cetera, is telemedicine. Telemedicine, I invested early on, maybe 10 years ago, in a telemedicine company. While our fund focuses on real estate tech and construction tech, I personally invest in all kinds of things. And so telemedicine was always one of those things where you could only see a doctor if they were in your state via telemedicine. This event, they took away that regulation, and now telemedicine can be managed by doctors. You can see a doctor anywhere in the country, no longer just has to be in your state. I don't think you can unring that bell. I don't think after this we say, oh, no, we're going to go back and do it the other way. Because most of that was lobbyists, and there's lots of reasons why it wasn't, the regulation existed. Do you see in real estate, I mean, are there examples in real estate where like we've shifted something so quickly, there's no way we're going back to doing it the old way?
Absolutely, and I think what we see so far is that, and for folks who are on the call, KP and I are both watching the Q&As as they come in, so we'll make sure that that we hit on these. I think what we see is that in the space of a few weeks, it's not necessarily the case that some radical new platform has been introduced to facilitate work. But to your point of telemedicine, I think that's a great parallel for what we see in real estate. The platforms that would allow us, as we refine their execution and implementation, to do business differently than we've done it in the past, have been developed and have been introduced to the market. Where we are is whether it's regulatory issue constraints or strong behavioral inertia on the part of folks that have just, all of us that have been in the industry for a long time. We've not been forced to say, can we do this differently? Can we do it better? Can we do it more efficiently? And there's some natural skepticism around, will I be able to close that deal, with a Zoom meeting? Or will I be able to use that online appraisal system for my independent appraisal? What I think we see now is that platforms that have been developed and built out over the last couple of years that have been adopted in a modest way, what's happening with the removal of, or the barrier to co-location, is that we're being forced to break the business processes that we have taken for granted, that we've relied upon, that we've been very attached to in a lot of cases. And so, as you said, we're not going to be able to turn back the clock on, the use of telemedicine. A lot of folks are, I think a lot of folks on the regulatory side of this are going to say, it can work, and it can be, and it can really enhance the efficiency, of a sector or a space that, that faces, cost constraints, cost escalation, where there, where resource constraints. In the same way in real estate, whether it's the way that we're conducting business to business and trying to get a deal done, and the sundering of that business process, requiring that we think about how we can, what are the workarounds that still allow us to get deals done, and they work. But also in the way that we engage with and interact with consumers and households and the client. So not just as the owner or the lender in real estate, but the tenant that is thinking about, what does this mean for my retail store? What does this mean for the way in which I think about my office tenant? Across the board, we've got implications for thinking about new ways in which we conduct business and the underlying processes, how we leverage technology. We've got sort of real challenges that are forcing us to think about new ways in which we engage with customers. And underlying all of this is that assumptions we've made about our reliance on co-location to get things done, to sell products, to get deals done, whatever it is. Co-location is something that we don't have the advantage of right now. And we're being forced to then use the processes, use the tools to say, how does business still get done? And you know what, as it turns out, we can still get a lot of things done.
Yeah, it's interesting. We launched Shadow Ventures 3 years ago, and we started with our incubator program. And we built our own platform leveraging Slack and Zoom because we wanted to be global. My theory was the smartest people solving the biggest problems, the assumption that they're an hour flight away or within my backyard is a terrible assumption to make. Like, I want to engage with that startup in Singapore or Tokyo or New Zealand. And at the time, people thought we were insane. Like, how can you work with the startup if you've never met them? It's like, it's technology, y'all. Like, it's just technology. It's not hard. And we went through, we definitely went through a cultural, the first year was just a total shit show. It was very hard. But, we figured it out. And I think everybody's going to figure it out. But I think the idea of service areas expanding, whether it's education. Now all of a sudden I feel like, oh, I can go to NYU. I'm in Atlanta, Georgia. I can go to NYU. And unfortunately in the educational field, a lot of the remote online stuff has been subpar, right? It's just, I mean, I don't want to go, no offense to anybody that went to University of Phoenix. I have zero interest in taking a class at University of Phoenix, right? I would, but NYU or Columbia or wherever, right? So I think the service areas have broken down. Real estate has been super hyper local, right? There's always that retail developer in Philly or Atlanta or Dallas. And I never really quite understood, like, if you know the formula for retail, why wouldn't you go into other markets? Why wouldn't you do more? Do you think some of these real estate folks are going to start to realize, like, wow, we can be national and global and don't have to just play in our own backyard?
Yeah, I think we are going to see that there's geographic scale, a potential for geographic scale, in every industry, whether it's, education or real estate, or anything in between. Real estate will be one where, that innate desire to make sure, and importance of understanding the local market dynamics of, seeing the space, those are still there. But we're going to see a raft of new innovative tools emerge from all of this that are designed to better facilitate, those processes. So, while some industries will inevitably lend themselves more to, taking advantage of scale than others, I think I'm really, while I don't want to understate that all of us are very, very focused on, the human toll and economic toll that the crisis is taking, we're also, in our space, looking at, what are some of the exciting, innovations that we see, startups bringing to the table to help address ways in which we can actually, achieve that geographic scale in real estate. One of the folks who's on the call right now has a question for you that I think we're all really interested in. You're working with a lot of startups. How have their needs, how have the way that your team is supporting them, during this period of time, changed? Are there things you're doing to help them maintain business continuity, or think about, how their business model has changed?
Yeah, I mean, it's a great question because we're super fortunate. We're just closing on our third fund, so we haven't deployed any capital. And most of our previous portfolio we've exited, so we don't have, you look at funds and, we're a 10-person team, which is small, right, in the world of size. If you're spending damage control with a ton of your existing investments, it's really hard to think clearly. Like you're just in, so fortunately we don't have that overhead per se. With our incubator companies, what I've been kind of saying is, before this, did you think you had product market fit? And they're like, yep. And I'm like, okay, well, the market just changed. So you no longer have product market fit, so reassess and start to rethink, do you still have product market fit? And honestly, just focus. If you thought you were focused before, you weren't. Like, you need to get more focused. And I think a lot of the coaching we're giving, we're doing some things that I think are important and necessary. We're doing a Monday meditation. We're doing things that I think that to touch on the human aspect of what people are dealing with. I joke around with some of my startups. I'm like, I have 2 teenage boys. If you need them to play video games with them online while you take an important conference call and entertain your toddlers, they're great at entertaining other kids. I'm happy to loan them out to you to entertain your toddlers while you do that customer call or whatever. But a lot of it is, I would say, a little bit of how they shift their resources coming out of this. Don't think about the new feature on your product. Think about what your customer onboarding process, all those things that you knew were important, but you didn't have time for, like customer onboarding. Can you take all the friction out of customer onboarding? Is this the time to work on those things? Let's not focus on sales as much because that's tough. Let's focusing on deep market segmentation. If you were chasing multifamily, great. What segment of multifamily? How many units? What location? What market type? So dig in, take the time to be able to go deeper in terms of thinking about your markets. We've kind of focused everybody on think about your markets and think about how you can operate with a lot less cash and de-risk some of the learnings right now. But I'd say it's a balance. There's I have this Calendly link. I actually shared it to the broader community, my 15-minute Calendly link. So I've been stacked with 15-minute calls from 7 a.m. to 9 p.m. And some of them have high entertainment value. Others are like, I'm actually, feeling like I'm available to help. But I think that's our only message has been, we're here to help. We opened up our online community to the masses and said, look, if there's no charge, there's no nothing, sign up and connect and get the help you need. So that's about all we can do right now. But it's really trying to get people to really think deeper. Startups run 1,000,000 miles an hour, sometimes without as much focus. Oh, we don't, we're going to go do a series of experiments. Rethink your experiments. This is a good time to rethink your experiments.
Yeah, a couple of people have questions about some of your real estate specific implications in terms of property types. One of them is about construction, and I think while we've seen that construction in many parts of the country and other parts of the world has been designated as essential. It's invariably the case that when we're talking to lenders, we're also seeing right now that there is that there is a pause on origination of new, what are perceived as high-risk construction loans. And in some cases where new construction loan applications are coming in, there's there's an environment of higher risk aversion that's impacting all of our investments and all of our evaluations of investment opportunities. It's just a little bit tougher to get a construction loan done right now. It's certainly tougher to get a construction project off the ground. Overall, what we see in the short term is that that's impacted demand for construction inputs, whether it be construction labor, but cement, steel, wood for softwood lumber for single family home construction. All of that's been impacted. I think in terms of long term implications, people are going to be thinking really carefully around how the crisis has impacted the long term outlook for different types of real estate, and has this in some cases accelerated the rethinking or repositioning of some types of real estate. What are the long-term implications for a hotel? As an example, one of the parallels that I've seen people draw has been to the housing crisis. At this point, it's very speculative in terms of what are the long-term economic, labor market, and real estate implications of everything that's happening. And you can look back as recently as 3 or 4 weeks ago. We were in a very different place in the United States in terms of how we were thinking about all of this and the scale of the epidemic, what kinds of responses it might require. That being said, when we look at the housing crisis, very different drivers, but an event of sufficient scale and severity that it fundamentally changed the way a lot of people think about housing. Do I need to own a home? Is it part of the American dream? Is the stigma associated with being a mid-career person that didn't own a home and sort of sliding away? That having very, very long-term implications for the way we think about housing as part of the American economy, and that tenure bias between renting and owning. I definitely see this as an event of sufficient scale, magnitude, and severity that irrespective of what the economic path is, how quickly we're able to motivate a V-shaped rebound in economic activity and in the job market, there's very likely to be some long-term lingering impacts of this in terms of how we think about co-location, how we think about the role of cities and density, how we think about business travel, leisure travel. There's going to be, I think, as part of this, some very real thinking about all of these different things, and whether it's the hotel sector, the retail sector, office, very clear implications for for every dimension of the industry.
Yeah, it's interesting. There's a book. So I was a product of the .com boom, and the ongoing .bomb. But there was a book that Harry Dent wrote in 1999 called The Roaring 2000s. And it was fascinating because it's almost like I dusted it off to apply to this day, because he talked about with all this innovation and technology and everything else, a little bit, I would say, a precursor to Friedman and the world is flat, type of things. He's like, why would you ever live in a city center? And he talks about the development of the exurbs. Like, if with all this bandwidth and internet and everything else, like, why do you need to jump on a plane? Why do you need to work in a high density? Wouldn't you rather work at the beach or at the farm or wherever else instead of, and we never did it, right? This was in 1999.
Sure.
But now all of a sudden, like, maybe your boss is okay with you working remotely and it's not a big deal. And it's funny, I'll tell a quick story. I had one of our LPs who's a little bit older. Last year, I sent him a link to Zoom. Calls me up and curses me out. He's like, why can't you just set up a conference bridge? Where's the phone number? And just starts cursing at me. And I'm like, fine, I'll send it to you. A couple weeks ago, I called on him to see how he was just doing, right? He's older. I'm like, hey, how are you doing? He's like, KP, this Zoom thing is fantastic. You should see if you can invest in them. Right? I'm like, I think they're a little bit further along. But now all of a sudden, here's someone rooted in this cultural idea of jump on planes face to face. That's all of a sudden realized like he doesn't need to anymore. And I think some of us are in a bubble, right? We're in a little bit of a bubble. We've been using these tools. I had another friend of mine text me the other day, hey, instead of going to the grocery store, you should use this new service called Instacart. And I was like, what?
New on the scene. So you're raising a couple of really important points. With your colleague that had been very accustomed to, there was muscle memory around that conference bridge and being able to dial a number, but discovering sort of the amazing opportunities that Zoom would open up for him or her. More than it being an issue around age. I think what we see is that the current crisis is exacerbating the digital divide, and that folks that have access to and are able to acquire new skills related to leveraging the available technologies, who are able to do their particular job function by leveraging the technologies, are in a very, very different position and world right now as compared to the folks that don't have access to the technology, don't have access to the connectivity, are in a position where for whatever reason they're not able to very rapidly develop, or acquire the new skills that would allow them to use those technologies efficiently, and whose job functions may be ones where they are more likely to be displaced by what's happening in the economy right now. One of the enormous challenges that I think that we face as policymakers, economists, elected officials is how do we address that? Because while that digital divide has always been very apparent, the implications of it for employability, for how people will be able to re-engage in the labor force as part of and sort of be part of that rebound, are profound, and will, for whole segments of society, really shape what the rest of their lifetimes look like. And so some kind of policy or private sector response, some kind of innovative tools that will help us to address that, because there are some folks that are at an extraordinary disadvantage. If they don't have that laptop at home, that Zoom connection, that broadband line running into their home, they're in a very different world in terms of their ability to continue to engage and to be active economic agents as compared to everyone who's on this call today. So I think that's a very, very real issue for us that we're going to have to address.
Yeah, I agree with you. We live in a bubble, right? And our previous mayor here in Atlanta, I said, I don't understand why you have all these departments. Why don't you just have an app? And he pulled out the stats and said, KP, it was like 50% of our residents do not have a mobile phone or something. It was like all these stats. I was like, what do you mean people don't have a mobile phone? What do you mean they're working off a landline? What do you mean they don't have access to the internet? And, I was blown away. I mean, just, being out of touch maybe. So I think you're right. The digital divide and how we think about how do we get resources into everybody's hands, and and it's not, oh, go use the computer at the library is probably not the right answer. But more, how do we how do we start designating that maybe smartphone is like core infrastructure required by our citizens in order to engage? And
it comes back to this issue of what is some of the opportunity as we're thinking about innovation and disruption. And certainly, speaking to different colleagues, some of whom work in very traditional segments of real estate finance, some of whom are working at bringing their ideas, monetizing new and exciting ideas. I think what we see is that the word disruption is coming up a lot, but it has very different it's carrying very different baggage depending on what part of the world you're in. And if there are folks who are trading CMBS bonds, and when they're talking about disruption, part of the challenge they face is that they've got much wider spreads. The functioning of that market has been significantly impacted. But there are also clearly ways in which the CMBS market will be able to leverage a sea change in how we think about using technology, our willingness and our readiness to use digital platforms to get deals done that could potentially be quite advantageous to that subset of real estate finance and debt. I think we've got a captive audience of folks who generally are going to be thinking about disruption in the most positive sense.
Right.
And what we see here is that we're at a juncture where the kind of change in business process and in behavioral norms, when you describe is there more willingness to say, okay, yeah, of course you can telecommute, a day or two a week, or maybe even for a month or two at a time. But the kind of change that we're seeing in people's behaviors, social norms around these things over the course of just a couple of weeks is something that, under normal circumstances would have potentially taken a decade or two to engineer. So, it's very, very abrupt, but that's an enormous opportunity for a lot of people. And I think about the example of, you mentioned Instacart, right? I think about the example of grocery stores along almost every dimension that we're going to care about from a business perspective, and more importantly, from a consumer's perspective. What does the consumer care about when they go grocery shopping? They care about product price, and there's an innate price advantage, when you're buying online for groceries. Product variety. When you're moving away from the bricks and mortar retail channel and have a smaller number of warehouses from which you're distributing, you're able to realize some economies of scale and get greater product variety. Product quality. The warehouse is going to potentially store and manage, distribute, the produce in a way that is designed to and intended to maximize its freshness as opposed to its presentation, as you might get at a bodega. So you've now got advantages in price, product variety, product quality. Consumers care about efficiency. Being able to say, I want my groceries delivered between 3 and 4 p.m. today, offers great advantage. When I talk to folks then about, well, why haven't you gone online grocery shopping? And this was, let's say, 2 months ago. Right. We get a couple of things. One is just, sometimes we'll get folks describing how going to the grocery store, seeing what's there, inspires part of people's thinking about what it is that they're going to cook. There's no company that does a better job of helping you to realize you needed something that you were not previously aware of than Amazon, right? I had no idea I needed all these things, but somehow Amazon, based on my shopping history and its algorithms, has figured out that there are things I need and I just didn't know it before. So product discovery, can happen very, very effectively online, even for groceries. The major challenge and impediment why we only see a very small percentage of folks online grocery shopping up until, for fresh produce in particular, up until the crisis, is really a behavioral one. But in the muscle memory around going to the grocery store, that has been, that process that we're so accustomed to, that we're so wedded to, and the inertia associated with that, has really been broken, allowing us to introduce exciting new processes that take full advantage of everything we can do in the shared economy and with online platforms. And I think that is an analog force of what we can expect to see, whether it's office, whether it's retail, whether it's multifamily, new models and approaches that where we're suddenly freed of a lot of the inertia that otherwise would have held us back from adopting more efficient and utility maximizing approaches to things.
Yeah, there's a question about like on-site due diligence. Being able to do on-site due diligence, and it's always been fascinating. We actually have an investment in this sector, and the need, especially multifamily, an asset class that gets traded a lot. That someone has to be sent out, a team of people are sent out to walk unit by unit by unit And then in 6 months it gets sold and another team goes out and walks unit by unit. And we've always thought, like, why isn't there just like a Carfax for buildings where I could actually, I can get all the economic data, right? The rent rolls, I can get all those things. But if I had great facility data on every unit, how often, which refrigerators are going to predictively need replacing and get a Carfax, so to speak. Would you ever buy a $50 million asset without ever stepping foot on it? Like, what is the purpose of showing up?
Yeah, so I think you're raising a really important point. This comes to sort of it being a continuum. It's not necessarily the case that we all need to visit the property and all sort of, have the tangible experience of being there. But it may not also be the case that at the other extreme, none of us have to go. Where is that place? Somewhere along that continuum. We are facing it and having to ask the question very immediately at a policy level in the housing market, because the traditional processes of independent appraisals and assessments and site visits, if we don't allow for some flexibility there, then the housing market in the United States has the potential to come to a very abrupt standstill. And that that's a significant share of economic activity. On the commercial side, I think you're raising a critically important point, which is that some of the information that you and I will need if we're going to go buy a building tomorrow is proprietary and private. The amount of information that we can get access to through public records, through some of the real estate research companies that follow, the ones that follow the more traditional models, is fairly limited. It gives us a general sense, and it's helpful background information. It might be the kind of thing that up to now, I'll read that company's research report on this specific asset and the comps that are relevant for it while I'm on my flight to actually go and visit the property. But it's background. It's not substituting for my seeing it. This idea that whether it's an application of blockchain, whether it looks something more like Carfax, as you mentioned, but the ability to create a market for data that is essential to facilitating transactions in a way that doesn't require us to reinvent the entire due diligence and underwriting wheel every single time the property transacts. You think about what are the impediments? We've seen incremental improvements in real estate investment that have been born from the introduction of new technologies and services and better access to information, but not radical change in the way we do things. And that's because the technologies have not undermined the existing business process, right? For us to get radical change, that business process has to catch up to the available technologies and what they'll allow for us to do. And that's where I think that there's an opportunity here to say, okay, the information gathering, collection, analysis process is one of the things that is a significant share of the overall transaction costs associated with buying or selling a property, or signing a new lease. Anything that we can do that would transform and not just sort of introduce incremental improvements to the way in which we can reduce those transaction costs, would bear significant fruit in actually introducing very meaningful new efficiencies to the real estate industry. That's where we unlock the potential. The technologies in there, this is an opportunity to escape the inertia of the traditional business process.
Yeah, it's interesting. So some of our LP community for us are large sovereign wealth funds that invest as just pure investors into real estate. And I gave them a little study I did. I was like, for every dollar that you think you're investing in an asset, only about 80 cents makes it to the asset. Between the lawyers, the due diligence, the brokers on every side, the money brokers on each side, the leasing, like all those people that are kind of built into the system, there's like a 20% overhead to deploying that dollar. And of course, their first reaction was like, no, there's not. No, you're wrong. And I just start whiteboarding out, like, here's all the people that get paid for you to deploy your $1 into an asset. Here's all the people that have to get paid. There's fund management fee. There's so many fees, right? And I found it fascinating that they had never thought about And their response was like, well, I guess that's just what the system is. So our hurdle as an investor is already at 20, like there's already a 20% hurdle built in. But since we're doing okay, then it's fine. And my point is like, why is it fine? Like, why don't we try to think about ways? But it feels like now there's actually an opportunity to really execute on something to shrink that inherent overhead, so to speak.
Right. And that's what I think is sort of again, not to minimize. I think we are all very, very focused on the human and economic implications and toll of what's happening. But when we do look at the real estate industry, the biggest opportunity here that I see is no matter what segment of the market we're talking to, that we're looking at, who we're talking to, a degree of willingness to revisit existing approaches to doing things, and an openness to considering that something novel and unfamiliar might actually be worth exploring. That readiness, that open-mindedness to really saying, are there ways that we can do things that are different from what we've done in the past? Can we leverage technologies? Understanding that some of the things we try aren't going to work. Not every idea that comes to the table in the next couple of months is going to be one that actually makes sense or introduces value, but a readiness to actually explore those ideas and see if they have meaningful application across the industry is probably the biggest overall change that I've seen in how we're approaching real estate in just a matter of weeks.
Yeah, one of my favorite books is Crossing the Chasm, kind of a must read for any startup, right?
Yeah.
And so that was kind of the question, like, hey, have we just pushed everybody across the chasm, whether they wanted to or not? I do these little surveys, and one of the questions I ask in my surveys is, what is the make and model of your cell phone? And I kind of use that to categorize people into where they are on the like innovation curve. There's certain people that have to go out and have the latest iPhone every time. And then there's some people that are on the iPhone 4 and perfectly happy. And that helps inform me on, more qualitatively their answers, right? And my team always gives me a hard time. Like, why do you care about what cell phone people have? Like, it's just one set of data for me to know where they're coming from.
Sure.
And of course, people assume that I must have the latest and greatest, which is not always true. I'm usually a model behind.
So I'm usually the day after Apple releases the new model, but I have to also rein myself in and say, what, I shouldn't be making judgments about people who are not using the most recent model. It's not saying something about their character as a person. It's just saying that they don't happen to have run to the Apple store. They're not fanboys. They're probably far more rational, reasonable people. There is a question that's come in about cities and local regulation. I think this is a really important one for real estate folks. I think what we see is that the impact on how we think about cities, the value of co-location, the potential impact. The president has talked about the possibility of a $2 trillion infrastructure program for the country. Far too early to say whether anything will come of that, whether it'll be something that we actually move on sort of as an economist. I think there's a desperate need for a national infrastructure program, but understand that one of the things that has tended to support co-location and added to the value of core cities has been a chronic underinvestment in infrastructure. If we had infrastructure that made it easy to get to the core city when you needed to be there, but work effectively from outside of the core city in that ex-urban or semi-suburban area when you don't need to be in the core, the absence of that infrastructure that allows for has tended to enhance the value of being located in the core. So if we were to get significant, a national infrastructure program to address those kinds of issues, that has implications for the city that are not necessarily favorable. The other issue that I think we also want to be keeping in mind is obviously the real estate issue around, do we need to be in the offices? How much telecommuting and remote working will we see? What does the online shopping experience look like? This really covers a gamut of different property types, but also that different cities and states around the country are in very different positions with regard to their fiscal health. And New York and Philadelphia are two examples of cities that both have local taxes on incomes, but where the outcomes or implications or effects of those taxes have been very different. Where in one case, there's been a strong local agglomeration that's offset some of the cost of that tax and still made it worthwhile to be in the core location. Philadelphia 20 years ago, you've got a high wage tax, not necessarily a corresponding value being created by the location in the core city, and so a significant loss of population and a destabilization of the fiscal health of the city. We've got unfunded pension liabilities. We've got fiscal and tax inefficiency. In some cities in the Northeast, in the Midwest, we're going to see the implications of those things be far greater as we've got this disruption to, thinking about co-location, but also to, local and state revenues. So one of the things that real estate investors are going to have to be thinking about really carefully when we are looking at geography is that in the same way that we have haves and have-nots in the digital divide, and that's being exacerbated by the current crisis, some cities are in a better position to recover and to reestablish themselves, coming out of this than others will be. And there are going to be some long-term implications of that as well.
Yeah, it's interesting. So I like this question because one thing, as VCs, we're in many ways, I think we're different, but in many ways we're the same. Whenever we see a go-to-market regulatory hurdle, we're out, right? Like we don't believe that as VCs, there's enough capital in the world to overcome a regulatory hurdle. And that's why there's some firms that just focus on biotech and pharma because they know how to understand the risks. But regulatory hurdles are always one of those risks that is a massive unknown. What we've actually done, in terms of our research that we're doing, we've shifted a lot of our thinking right now. We're focused on online permitting, anything around online permitting, inspection, all the things that 3 months ago, I would have said regulatory, like it's going to be pounding sand. We're looking at modular because we think some of the regulatory aspects and thinking around modular is going to kind of be put to the wayside. So we really want to understand, I would say more the picks and shovels of modular construction and how we do that. And then we're going to continue to look at construction. We're deep in construction technology. But I think some of the stuff we're like, well, unless you have a PE sign off on it, you can never do that. Like bridge inspections, the issue with bridge inspections idea is that fly a bunch of drones and see if there's cracks and certify or don't certify. There's a law that says an engineer must be within arm's distance of the object to inspect it, right? That's the rule. So while probably a computer is probably better than some of the engineers I know, you can't do it. So all of a sudden, we think that there's going to be maybe an era of softening of strict, well, we've done this for 100 years this way, regulatory stuff. So we're tracking those things pretty closely. It's a good question around the regulatory piece.
Yeah, no, and I think it comes back to your earlier point about telemedicine, we've got a very strict, methodical, disciplined approach to how we offer medical services in this country, and we've out of necessity had to allow ourselves a greater degree of flexibility under current circumstances. But I think if there are areas where we can get the job done very, very well and efficiently, in a way that leverages the technology and minimizes co-location, we're going to see state, local governments that are far more open to that than they have been going into this. KP, what kinds of things? First, I should say how much I appreciate the opportunity to join you and the team. What kinds of things is your team doing to continue to sort of bring insights to the industry? Is this a regular series that you're hosting?
Yes, we're probably doing 2 a day.
Okay.
So one of the things that's neat, you'll get an invite. We're very active in our Slack community. We have about 600 people in our Slack community. So one of the things we try to do, it's great. There were 100 people on the call today. We can't answer every question. Some of the questions are hard. If they're not framed correctly, it's hard for us to understand what they're really asking, those kind of things. But we're going to give you a Slack account into our community. So one of the things that's nice is kind of availability of us to be available to the community to answer questions offline. Sometimes people are shy. It's weird. All you have to do is type it in, but people are like, oh, I didn't want to ask. So it's a great opportunity, post-event. We don't charge anything to be part of our community. The only thing we make people do is fill out an application so we know they're not selling a get-rich-quick scheme.
Sure.
That kind of. But yeah, the idea is that we're doing a series of these events, two or three a day. We're doing some startup founders that have been successful. Kind of this how you. I think people need some inspiration. I've got a few of my friends that have built their startups during the worst, previously known as the worst of times, that have been very successful, to share war stories. I think that's about all we can do, is kind of get the right people talking about their ideas and thoughts. And sometimes all it takes is one or two things to resonate, to shift someone's thinking to go down the right path. And that's all we're trying to do, is create enough
and
coverage.
I see that Kayla just shared for folks in the chat the link to the Slack community hosted by Shadow VC. So if you want to join that, the link is right there. Similarly, at Schack, we're hosting probably almost every day. A different faculty member is hosting a webinar or an academic lecture on some aspect of the real estate industry and how it's being impacted. Later on today, we'll have one on how commercial real estate finance and traditional models of finance and securitization are being impacted. Professor Tino Korologos is hosting that, but we're opening as many of these as possible to the broader real estate community. Very much with our motivation is very well aligned with what KP's described, and so if you want to join in, listen in on any of those that we've opened up, you can get more details on them. Just follow us on one of our social media accounts, or follow me on social media, and you'll see the links to being able to join the informational lists, and we'll keep you posted on everything that we're doing.
Sam, thanks so much for taking time. I know.
Thank you.
And many times we're all kind of tethered to our laptops, but it doesn't seem like we're relaxing that much. Everybody's still pretty busy.
Sure.
Between personal commitments of being home and team and all that. So I really do appreciate you taking the time to talk.
Likewise. And next time I want to see you on the drums or with that guitar. Yeah.
Well,
all right. Have a wonderful day, everyone.
All right. Thanks, everybody.
Bye-bye.